Hey, what is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody joining live over on YouTube. Comment section, chat is open, please. It makes this thing so much better when you guys throw a lot of questions, comments, stocks, stuff like that. Makes it a lot more interactive, a lot more fun, hopefully a lot more helpful. Monumental day, possibly. We'll see. Um, what could be signaling the start of a new uptrend. We'll take a look at what went on. We'll take a look if it is an official follow through day. And then we'll talk about what's going on in the market, how we should be handling this, and hopefully answering, like I said, some of the questions you guys have in there. And hopefully I can help some people out. So without further ado, it's time for the wrap review. All right. Yo, what's going on, Chad? Appreciate you hopping in. There you guys have disclaimer, educational, informational purposes only, not should be construed as financial investment or trading advice. Hold on, sorry, 1 second. God. All right, we're good. I will admit I have a little bit of a nicotine problem. So actually, does that get me in trouble on YouTube? I don't know. Oh well. So just fixing myself up over there. But all right, let's get into it. I try to be just straight up with you guys. All right. So let's get started. We're gonna start with the actual chart today. Um, should we start with the chart? You know what? Yeah, let's start with the chart today. All right. We'll start off with the NASDAQ. So look, you guys all know where we're at. The big uptrend, the chop fest, the breakdown, the rally, which started on Thursday, July 30th. And then from there, that became rally day 1. Then we had 2, and yesterday was day 3. I spoke about it yesterday in my Bobby breakdown write-up. I was honestly expecting normal action to be either some chop, some sideways, some tightness, or possibly even a drop from this point. And the reason being, we had those three levels. I mean, yeah, basically, I would say 3 levels. You have the downtrending line, you have the 50-day simple moving average, a whole number of 2,600, all in the face of this market, all starting to bring resistance. And we were holding below these highs over here. So essentially, let me get rid of this. Essentially, was expecting after a nice kind of bounce off the bottom. Best case scenario, we kind of tighten up or have a little drop. Worst case scenario, we completely bottomed out from there. Today was an expectation breaker. Yes, I know we were primed for a follow through day. Yes, I know the market has been doing fairly well, but again, given how the context of the current market was, today was definitely an expectation breaker. Not only do we have a really, really large up day, we blew through the 50, the downtrending line, through these prior highs, straight through and up, right through all those areas of resistance. This area being a very, very key price range that I'm happy to, and the 2,600 too. I forgot to mention that, but this area being a really, really key area to watch because there was just so much resistance. And I talked about this today over on Discord. We were just talking about kind of chart pattern setups and got into just a little bit of how I look at the market and a lot of what I'm doing is I'm making lines on highs, I'm making lines on lows, and then I'm watching to see where the market is finding either resistance or support. And the more interaction at that price level, the more confirmation of resistance or confirmation of support, the more important that level becomes to me. And this level had become very, very important because we had seen day after day after day just the market hitting its head on this range. So to see us not only get through the 50, not only get through the downtrending line, not only get through the 26,000 range, but to also break through that range and to get significantly above it and close above it, super, super positive. So now the question that's been among everybody's minds, everybody in over at Discord, you guys have been asking this kind of throughout the day. Everybody's been weighing in on their opinion is today a follow through day? Well, officially on the NASDAQ, no. Volume was lighter. Obviously, we got the percentage move, right? So there's no question there that on whether we got the move in terms of the price percentage move. But the volume just wasn't there. The volume was a little lighter. This may update. I always say this. This may update. My kind of thing will sometimes recalibrate itself later on, and index volume in itself is a funky thing. Um, but yes, we did not officially get a follow through day in terms of the volume, as Webster would say, Webby, a follow through day in spirit. And look, it was just a monstrous move. So this was one of the first things I was expecting volume to come in close, just based on kind of a couple things I was looking at. And that's why, as many of you know, I did put some money to risk in the market. So from here, if we're looking to the upside, it becomes clear that we are starting to see some resistance at the 514 high, which also sits along with the 616 high. So this area, and even a couple days here, again, one of these, when you start to see constant interaction, constant resistance at those levels, this area is definitely somewhere I'm watching. Today we saw that resistance here. So we're going to keep an eye on that. And then up here, obviously all-time highs, keeping an eye on that. To the downside, really the main thing I want to see us hold above would be ideally the 50. The next would be the 21. If we start breaking down, back down below and start going towards that 21, I'm probably going to get much, much more cautious. And that's probably about where I'm going to draw the line. Now, if we take out this rally, then obviously we're right back into a downtrend. But look, things are looking good. I'm going to talk a little bit later about outlook, approach, exposure, however you want to put it, to this market. But let's first just get through the indexes, because the S&P did give us this follow through day. And doesn't this sound familiar? If we look all the way back to April 8th, what do we have here? We have a follow through day on the S&P. And then we go all the way back over here, and we did not get the follow through day on the Nasdaq. Now, I will say it was above average volume on this day, and competing with a large volume from the prior day. So a little bit different. Still competing with the large volume here, but still below average. So, but very interesting to see. Once again, we have the Nasdaq not giving the follow through day, and the S&P giving the follow through day over here. But not only did the S&P give the follow through day, it blew through all time highs with a extremely strong breakout. We gapped up through all time highs right at the open, and then the market kind of took off. When you look at the 15-minute chart, just to get an idea what went on intraday, look at that, just straight up, just right off of the open, and just kept climbing throughout the day. So really, really positive action there. Very, very simply, what are we looking at on the S&P? We're looking to keep going higher. We're looking to hold above these levels. On the downside, we like to obviously hold the all-time highs. We would like to obviously hold the moving averages, your regular, usual uptrend style of levels that you're looking at as we start moving higher. So very, very simple here. Yeah, follow through day on the S&P. So good to see that there. The other thing that was interesting is we got this as a broad-based move, right? We have the S&P, we have the Nasdaq, we have the Dow making all-time highs, we have the Russell bouncing right below those all-time highs. We have those mid caps right over here breaking out to all-time highs. Actually, I didn't even look at this, but let's just look. All right, Bitcoin. I mean, I don't trade this. This is ridiculous how bad this has gotten crushed. It's funny because I had a lot of people telling me this was the time to buy right around here. And I said I wouldn't do that. But yeah, all right. So we'll ignore that on the Bitcoin side. But look, it's just broad-based move across the market. Really, really good to see. So yeah, all right. Let's jump over. I don't see anybody jumping in with any questions or anything. So let's go over and look at the dashboard. I did get a chance to update this. So market stance, I'm in an uptrend status. The follow through day triggers it. Exposure levels 20 to 40%, I think, is something that you can manage, even should this follow through day fail. If you have good stops, if you're managing it, it shouldn't be too bad. Your Webby trend sitting at choppy, your 50-day sitting at sideways. That's just going to kind of be the thing when we're in a market turning around. And then again, there's your rally day. Day 4, we get the follow through day. Day 4, no follow through day officially on the NASDAQ, but still very, very strong action. We're looking at the index performance. Let's go daily. So really much same some of what we just saw in the market, right? Gap up at the open, high from the open, strong moves, and strong closing ranges. Green across the board, everything looking beautiful. And then moving averages, when compared to last week, we're seeing that we've got above all of these levels. Yo, what's going on? Got more people in the chat. Like I said, guys, questions, let me know. Um, so yeah, like I said, we're above all those moving averages, which you guys just saw on the chart. In terms of distribution days, so let's see. We're gonna go daily today, and this is what I talk about when I say I don't get too concerned about resetting my distribution days. I like to just let them fall off naturally. I know once we start to get the actual price action that shows the distribution is legitimate and we're downtrending and we're breaking key levels. I just keep in mind that if we're looking for a follow through day, I don't care what the distribution count is. If we get the follow through day, it's kind of old news. Um, and then I'll let things fall off naturally. It's a much simpler, easier way. If anybody's seen IBD and some other ways to do it, then you kind of like you look for a follow through day, you turn them off. But then sometimes when we recover too quickly, they reactivate those days. Sometimes they don't. It gets confusing. This is a simpler, easier, and I think non negative or no con real way to doing this as long as you look at it properly. So today we had price action, three distribution days drop, one on the Nasdaq, sorry, two on the Nasdaq, one on the S&P. We lost the 729 Wednesday distribution day and the 723 and 728 distribution days over here. So that brings us now to a four. We're starting to get into that lighter, moderate distribution levels. And the other positive is, so today's Tuesday. So this is going to be Wednesday, Thursday, Friday. On Friday, we're going to lose another distribution day here, which is going to bring us down to three. And if we get another strong day, not doesn't even have to be as strong as today, but another strong day, we're going to lose days here. Here, very good possibility to lose this, very good possibility to lose this, very good possibility to lose this. If we continue this strength and we have a really strong rally going into the week, it is very realistic. These distribution days are almost next to nothing at the end of the week, essentially resetting themselves. So, yeah. All right. So, we have our sector kind of dashboard here. We'll look at this really quick on the day. What did we see get hit? Utilities and energy, right? Not surprising there. And then what did we see take off? Technology, which we all us growth stock momentum traders love to see. So most of the weight coming in the tech space. Then we have for the materials, industrials, financials, consumer staples in the upper half of the day. And then if we're looking at the ranking, which again, it's going to be a little slower. It's a little longer term, technology, energy, industrials. So looking very, very similar to what we had around April in terms of the price action, in terms of what was going on. So very, very interesting to see that. Let's now let's jump over to Deepvue. Oops, that's not Deepvue. That's Deepvue. And for those of you who don't know, I am a Deepvue partner. This is the tool that I use for all my stock screening, my fundamental analysis, my technical analysis. Anybody who's watched this knows that I do this. This is what I use for all my stock stuff. Insane the amount of updates. I actually just found this today. It's if you're a Deepvue user, I got to bring this up. The stop loss line, awesome. So it's you come up here, you look up in your indicators, you just type in DV stop loss line, you add it to your chart. And what this now will allow you to do is you can put a percentage stop loss from the current price at whatever you want. So I think my max, I try to put my max. So I just did a 7. I did 8 on the weekly. It doesn't remember. 7 to 8 is like my max percent loss that I'll ever look to take. Style it however you'd like. I just did a solid red line. And now, whatever the price is at, you can actually see like where my stop loss would take it to on a technical level, which is awesome because you now have the ability to say, all right, 7 to 8% is the max loss I'm going to take. Does this make sense technically if you're looking to add into not only couple it with a risk kind of stop, but also with a actual technical stop that makes sense on the chart. So you're wrong in terms of the amount of risk you put in. You don't want to put too much risk on a trade, and you're also wrong in terms of breaking some key level or some thing that you think the market should not test. So, yeah, just found that. Think it's pretty cool. A lot of other stuff. Working on some pattern rec. Really, really customizable. If you're interested, link in the description. Um, Actually, I got to take out that free trial code is no longer available, but you can try out Deepvue. I have a 12-month code. I also have a link. So use that 12-month code and you get 12% off. Best on the annual if you want the most savings. All right. Before we get on, let's answer some stuff. We got this is the fourth consecutive gap up. How many gap ups or how stretched the index would be where we get a high probability of a short-term pullback? Great question. We're going to hop out of Deepvue quick. We're going to go to the indexes. So I want people to remember what went on this last rally day. Okay. Because I'm seeing a lot of very similar commentary coming from people. And it's like people completely forgot what happened a few months ago. Not as snappy and as quick of a rally, not as long and drawn out and deep of a correction at all. No, we did not break the 200. So nothing like we got here in terms of the downtrend. But in terms of the recovery, very interesting to see that the follow through day or the follow through day in spirit did something very similar where it gapped up through the 50 and was very, very strong. Not as quick. It wasn't on the fourth day per se. But the reality is, like, I know people like to look at prior markets and, oh, how often does it do this? How often like markets in general, I don't like to get too in the nuance of like, oh, if we drop X percent within this amount of time frame, the probability of a rebound within the next 2 months becomes this is like it gets very complicated. I'm very, very simple. I look at the price action, support, resistance, follow through days. That is it. This isn't like you're betting your life on this. It's just simply a signal to start putting risk into the market. And what we saw happen back here was people said, we're too extended. Look how far off of that 21 we got. We're all the way through the 50. We're too extended. And look how many consecutive up days we had in a row, all the way through to all-time highs. A slight pause, barely even a pullback. I wouldn't even call this a pullback. I would just say a little bit of sideways action, and then we just kept going and going and going. And this just locked people out. And people who ignored the follow-through day, which I constantly tell everybody, do not ignore the follow-through day. That was why one of Bill O'Neill's major rules was on a follow-through day, you buy something, you start testing the market, you put some exposure into the market. People didn't do that. People kept saying, we're extended, we're too extended, we're too extended, we're too extended. Oh my God, we're too extended. Oh, that's the pullback run. No, no, too. And they just got left behind. There's a reason the rules are the way they are. There's a reason they've worked for a very long time. And yes, again, they can fail, but we're not betting our life on this. We're just simply using this as a guide and a reason to start putting some risk into the market. And you just got to be comfortable with, maybe I get stopped out of a couple trades, but that's the price I pay to figure out if we're going to start resuming an uptrend. It's not buying every single bounce off the bottom. It's not buying, a day 2 or 1-2 correction. Rebound. You're getting some confirmation on the fourth day or later showing that there's likely institutional money moving this market up. And that's enough of a signal and enough of a reason for me to start buying in the market. So to answer your question, after how many gap ups or how stretched the index would be, can we get a high probability of a pullback? It becomes in these turnaround situations or possibilities, we don't know if it's going to work out. It becomes a little different, right? I wasn't too concerned here, right? In the first couple of days, as we just saw this complete rip through, getting through all these levels. As we started to get to all-time highs, I started to get a little more cautious, knowing that we had a high probability of getting pulled back. So, I would say if we start pausing around here, the probability gets a little higher. If we just completely rip every single day that gets further and further away, every single consecutive update we get, the probability technically increases little by little. But my question always is, What does that mean that you shouldn't buy? It doesn't mean that you shouldn't buy. It just means that you should be understanding that every trade you put on carries a little bit more or a little bit different of a risk from when you're buying a little deeper in the turnaround situation. So, um, how stretched do we have to get? Who knows? Look how stretched we got here before we even tested the 10-day. Maybe this is stretched. Maybe we pull back from here. Possibly. Maybe we don't. Maybe we go. So I always am just very cautious about people saying we're extended when we get a follow through day in these moves, because very often it's an explosive move and a lot of people get left behind. And if you're worried about us being extended, you're going to get beat up. And that's a big reason why CANSLIM is a breakout strategy. And if you really look at it and understand the strategy in and of itself, it's mainly designed around these type of situations. It's mainly designed around some sort of pause, some sort of correction, a basing pattern, and then a explosive move that very often becomes an extended move. This, extended here is different from extended here or extended here, because it's after a large digestion. The same way with the stock, same way with everything else. So hopefully that kind of helps you understand how I look at the extension and really where it becomes not as important in my mind to worry about just yet. Eventually it will be, but just yet, right now, it's not too much of a concern, and I don't get overly worried about it because, like I said, we could pause right here and digest this. We could keep going and not digest it, but I'm early in the follow through day. It's kind of like green light. I'm looking for this market to keep pushing and for me to keep putting a little bit of risk on earlier in this move. And maybe that's it. Where I know a lot of people saying we're extended and they're wanting the pause to happen here. I'm looking at this as we're pushing through, we're showing institutional. I want to see this keep following through. I want to see this keep pushing. Ideally, yes, everybody likes things to tighten up and step up. It makes it a lot easier to trade. But to get an explosive move with some big gains like this, sometimes you need that just parabolic explosion off the bottom where money's just pouring back into the market and you're just sitting there riding it up. Thank you for the answer. It means so it means keep on putting risk, but no, the higher we go, the higher the problem. Exactly. You basically just took my entire rant and made it make sense. Thank you. All right. Probably doesn't help that I'm doing this as I'm drinking pre-workout because I'm going to work out after this too. All right. Back over to Deepvue. So the big thing we'll do our usual top-down stuff. Let's start with our sector tracker. We'll look at today first. So tech looking just like the Nasdaq. We're not going to sit here and dissect this. I think you know what the Nasdaq did. You know what's going on with tech. Expectation breaker, the whole nine, everything over there. Materials, strong day. We haven't broke from this choppy sideways action, but still strong day. Industrials, really, really strong move sitting right below those all-time highs, looking like it wants to break out. Cool. Financials. Financials has just been in a healthy uptrend. Right around here, I think, is where it became, and I talked about it on one of the rapid reviews, that this looked ready and coiled up to hopefully spring higher, and it did. And now it has just been trending higher, took out, made its all-time high, and it's continuing to go. Communications is damaged. Consumer staples is definitely a laggard. Consumer discretionary, definitely a laggard, though it did make it above the 200-day simple moving average. Real estate, I don't tend to really trade names most of the time in this space, but at the same time, definitely not one of the stronger of the groups. Healthcare really wanted to get up there, and then it's kind of got rejected at all-time highs, but it's also still holding the 21 EMA. So I still think this is a group worth paying attention to for sure. I don't think this has completely fallen apart. It's just kind of acting normal and healthy and just seeing a little bit of resistance and maybe digesting this gain a little bit longer than we thought. Maybe we thought this was enough, and the market's telling us no. Energy. All right, so energy. Energy looked like it was getting a nice double bottom. We had this really, really strong move. We reclaimed the 50 and it was starting to tighten up. And it almost looked like kind of what we were all talking about with that financials XLF, where it was like tightening up after a move. And I part of me, and this was, to be honest, what kind of made me a little bearish going into this week and even after yesterday was like energy looked like it was just coiling up to make another surge. And the way the market was playing, if energy was moving, it was likely the rest of the market kind of lagging. So, um, but today was, we kind of broke the 21, shook out a little bit, and then rebounded. It's not completely demolished at all. It's looks like it's just a little longer to digest. So still healthy, still worth paying attention to for sure. And that's something to note too. Like we saw energy, right? Energy April 8th. Where is it? And then we kind of collapsed and chopped around. Um, it didn't necessarily get annihilated. I mean, it dipped, it came back, it dipped, it came back. Like we could see this do something similar. Just because energy is chopping, or it doesn't mean the market's damaged. Just because energy is going up doesn't mean the market's damaged. Um, it's just something to take note of. Utilities has worked, and we're back to tech. So if we're looking at the sector ranks that Deepvue's got, let's do 3 month. You got financials, healthcare, and IT. I think those, and this is definitely how I'm seeing things. These are the groups that I would pay attention to. These are I think where the focus should be is in these three sectors. Sure, there's stuff in energy and some of these other material spaces or not, but I think that we're looking at the 3 month time frame where the market has been choppy since the beginning of June. So you have June, July, and now going into August. Um, this is where my main focus is being. If we switch over to the 6 month, you still see IT, you see energy because we had obviously the big move there. And then if you go over to 1 month, energy, consumer discretionary, financials, and 12 month, it's probably what do we got? Energy, materials, information technology. So just looking across the board, again, this I think is really where the focus is right now for a lot of those swing/position traders. Um, Thoughts on AGYS? Yes, absolutely. I will bring that up. Let's real quick before we jump into that, let's just take a look at what went on from an industry group perspective. Let's go to my specialized industry groups. This is your 12-month ranking. Being that this was short and rapid of a correction, this is going to lag. This is going to be something that like you still see memory holding up the most. Um, we will, kind of ignore that for now. Let's look at what's going on short term. So this moves very quickly. And I like, especially in these choppy markets, to see this. So we see technology really starting to move to the top. Looking at some of these names, we got smart devices, IoT, edge computing, software clearly standing out in this market for sure. Um, so a bunch of names fall into the software space to kind of take a look at. You got AI software platforms, you got Datadog, all these kind of, Snow, a bunch of these names kind of falling into here. Then we start going into some financials, software industry specific. So a lot of software, a little bit different from what we saw in the prior market where it was just semis, and more semis. What else? We got LiDAR, a couple names in there. So you guys can kind of get a gist of what things look like just looking at the top 20. Obviously, feel free to pause and screenshot that. You got some names like Crowd and what else is in here? I always pronounce this one. 40net. A lot of these names too looking really strong. So this is really where I think a lot of my focus is right now because of how quickly this market has turned around and where I would take a quick look. For the day though, we'll let that load for a second. We'll go to the daily. And here's what happened today. So we saw the oil, gas, the energy stuff, a little bit of the healthcare, some of the industrials get hit. A lot of this tying to just kind of gas, oil, and what's going on globally in terms of the economical side of the conflicts and wars that are going on. And then over here, we're seeing look, some of those prior prior leaders like semis showed a lot of strength today. So you can kind of see that right there. And rapid movers in the long-term ranking is going to be a lot of what we saw in those short-term leaders, but you guys can see that as well. News, we got a job report on Friday. Keep that in mind. And we're in earnings season. So keep that in mind. This takes a long time to load, and there's a lot of names. So we're going to skip over that. But just understand there's a lot of names reporting. And we'll kind of talk about that too when we talk about some stock selection stuff going on. All right, I'm going to go through my two buys, and then we'll start talking about some of the stocks like AG, YS, anything else you guys want to throw in the chat to get my 2 cents of what I think about what's going on. So I'm going to summarize what I did today very clearly in the sense of these are two names that have been showing a lot of relative strength. These are two names that have kind of been names I've been watching for a while now, and the market has been choppy. Names that I have tried to buy and both profit off of and continue to show strength. And I talked about this today when we did a little chat in Discord. What stands out, because there's a lot of ways, right? Everybody, we all talk about it. I do. Everybody does. You're looking for relative strength. What's bucking the market? What's outperforming the market? What's the leader? Who's the new leader? There's a lot of ways to look at it. Some people looking at relative strength. Some people like looking at whatever other indicators they use. One of the things that I think is the kind of very clear visual way to see this is when the market's breaking its 50-day simple moving average and you have names holding or just barely shaking out below the 50-day simple moving average, it shows me that we're kind of bucking the trend, right? It shows me that this is acting differently. You also have the RS line. You also have the relative strength numbers and ratings there as well. And these were two names that clearly stood out. So crowd, I ended up buying this later in the day. It was in the second half of the day. Basically, if you look here, it looked like we were just getting above this close. We ended up basically closing like right at those all-time highs. But at a couple points in the day, we were looking like we were getting above, this high right here. Again, being one of these names has been showing a ton of relative strength, it was hard for me to ignore. And it was also one of those names we had plenty of time to get some movement in terms of the relative strength of those names. Not the relative, sorry, the EPS. So we had the report coming out. We got plenty of time to get some moves on this, but this is looked very, very healthy. It's clearly a leader. It's got good fundamentals. It's a strong CANSLIM stock. And that's what I really want to focus on buying. I'm also not opposed to buying breakout style trades earlier in the uptrend, because very often those tend to be the leaders. I don't necessarily need a super, super tight buy. It happened before, and we had talked about this again today in Discord. SanDisk had this gap up through these areas. It was starting to get a little bit extended. It didn't concern me because it was on a follow through day and it was showing clear leadership, and it was one of those names that I wanted to get in on, and I'm willing to buy earlier in the uptrend, or possible uptrend. I'm willing to buy more of a breakout style of trade. As we get later, where those breakout style trades get more and more likely to fail, then I start to get more where I'm looking for really, really tight technical entries, early entries, pullback entries, things like that. And then my second buy was in Dell again. There's a lot of names in this group. So you had Dell, NTAP, and NPE, or Hewlett Packard. All three of these names kind of falling in that same information technology, hardware, storage, peripherals space. And I decided to go with Dell because I felt Dell was the leader. When you looked at a lot of the relative strength numbers kind of up here, it had some of the best numbers. The other one was definitely Hewlett Packard. But we also had, this was trying to break to its all-time highs. The depth on that base was only 24%. So really being held again, it is, 24. This is one thing, right? Dell, big name, 8.75% ATR with only a 24% depth. So really just kind of chop moving sideways. Hewlett Packard, 6.45% ATR, a little bit deeper of a base. But needless to say, both were looking really good. NTAP also looking very good. Love how clean and uniform and nice this chart is. All of these, I like the fundamentals overall in these names, all having good sales, good earnings, good institutional sponsorship. It really, truly, obviously ROE on this one's trash, but it really just came down to making a decision on what I felt was the leader. And to me, it seemed like Dell just didn't want to sell off as much as some of these other names and was really showing a lot of relative strength. But I think any of these three names looked really good. I decided to make my decision on Dell, thinking, Dell's the big player in this space. Dell is a leader. I know there's not so much crossover between all three of these names, but that was my choice. And at the end of the day, I could be wrong. I could be right. You could be wrong. You could be right. We could all be right. We could all be wrong. We don't know. But that was my decision to go with Dell. And one of the things that was brought up to me was somebody said to me, Dell is overcrowded. And I said, okay, can you explain to me what you mean by overcrowded? Everybody's talking about Dell. I said, okay, well, what's the problem with that? Well, I heard that if everybody's talking about it, it's probably going to fail. I'm like, that's a very, very general statement. Very, very general statement. Um, when you have a stock that moves up in price, what do you need? The market is based on what? The price is based on what? It's supply and demand. So when there's a large demand in this name, and you're seeing all of us momentum and growth traders wanting to buy this name because we're all seeing the same thing of how strong this name looks. Yeah, could it be that it's going to be a failed breakout and we're all getting played and somebody's trying to force a bunch of us growth momentum stock traders into the name so that they can offload shares? True. True. That could be. But when we're coming out of a follow through day, I feel a little bit like less concerned about that. And when we're all seeing how great this looks, it's not like I'm going to ignore it because, well, everybody sees how great it looks. How great could it be? It's not really how I look at the market, right? If we all see how great it looks, it's probably because it really does look great. And there's a lot of demand in this name. But again, I think that a lot of people are talking about Hewlett Packard as well. And this was a nice little break of this range. And I like that even just a low day stop. And that's because that's what I have here is low day and low day stops on both of these names gives you a good way to assess your risk. So um, this hit the breakout point and reversed, closed inside the base. So this was really even if it triggered, you're probably still in it, but you might want to be careful because this might see some. Now that we've seen the resistance there, it might continue to see that. But when you look at how Dell acted, we did see a little bit of resistance there at the all-time highs. But here we were able to get above that area as we're looking to build up that right-hand side of the base. So again, at the end of the day, nobody knows what is truly going to be the next big leader, but Dell has been a name that has been screaming on everybody's screen for a very, very long time now. And today it made an attempt at breaking out, and I would argue it broke out and just kind of squatted right at that buy range. So fact of the matter is nobody knows who's going to be the big leader. It's just we're looking at what seems to be the big leader right now. Could be any of those three names. And that is where I am at. Total of about a little, I think it's like 32% somewhere exposure that I have in the market. A little heavier weighted in Dell, a little lighter in crowd, but um, essentially looking at pretty much like 15 to 20% positions between the two of those, bringing me to about 30 to somewhere between 30 and 35% exposure into the market. Again, with low day stops that I'm very, very comfortable with putting that risk into the market to see if it works out. All right, let's go. We got Algesis, is how you maybe say that name. So let's look at the weekly first. From a CANSLIM perspective, like earnings, okay, sales, okay, earnings and sales, institutional sponsorship, kind of choppy, no ROE. Relative strength on this name is real rough, really rough. Horrible 12, horrible 9 month, okay 6 month, good 3 month, horrible 1 month. Good to see it right in that 3 to 6 month range. Not gonna ignore that, but it's definitely a concern. My other concern is we're looking at this weekly, and we got a lot of upside resistance. It's very, very wide and loose. And then we look here on the daily, we're just start to confirm that uptrend. I think it is definitely good that we're seeing like what seems to be a possibility of like a first stage type of base forming, right? This is like almost like a first stage type base, but I always look to the left of the chart because the reality is there are people all in here that may still own this name that maybe didn't get washed out. I would say maybe these people got washed out, but there's a good chance there's still some people in this name that rode all the way down and now are just praying to get back to break even. And that creates selling pressure. That creates supply in the market. And that hinders the growth on the right hand side as this stock starts to try to rally. Because as you have demand, 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 then at right around here, you get a ton of supply coming into the market. And the price could either pull back, stall, or just create some resistance. So when we're looking at really, we're still 23.29% off the 52-week high. So we're pretty far off the 52-week highs. Again, we just got above the 200-day simple moving average. This is early. This is early. And the question I always ask, and I said this today in Discord to everybody, is when you're buying a stock, the number one question I ask myself is this the best name out there for me to buy? Do I feel that this is, let's say I'm trading between anywhere from, let's say, 4 to 10 names, give or take. And I'm sure most of you fall into that. Do I think this is within the top 4 to 10 stocks available right now for me to put my money into? If the answer is I don't really know, or the answer is no, then why am I buying it? I want to outperform the market. I want to use my ability to trade quickly and to be faster because I'm a smaller trader when compared to giant institutional funds. In if you're watching this, and even if you got a couple million, even if you got 3, 4, 5 million, you're still a small guy. Hate to break it to you, when you're comparing to these big institutions with billions. And that speed and that quickness allows me to focus on what's showing strength now and not have to sit here and buy lows and try to build into something for a longer term move. I can get in what's moving and what's moving now. This to me just doesn't scream cream of the crop. This doesn't scream top 10 out there for me to buy. And that is why it's not on my watch list and it's not something I'm worried about. Now, I don't think there's anything wrong with watching this name. I don't think there's anything wrong with saying, oh, it's pretty interesting to see this turn around. Maybe it's turning around and becoming a new uptrend. We got Stan Weinstein, we're just starting a stage 2. Maybe this goes on a big run. Fine, but I'm not trying to guess. I want my money in what's working now. I want my money as a momentum trader in the leaders and riding those leaders trending now. And that's how you're going to beat the market. I just see a lot of stocks coming out of downtrend in the software industry. Broader participation coming from the software group. Okay. So to answer that, buying the laggards is very enticing, right? And if you've read How to Make Money in Stocks, and I urge you to read it or listen to it, actually, I listened to it more times than not. It's on Audible. And they put one of the more updated ones out there too. If you want to say like, oh, I'm going to buy this because software is doing really well, this is cheaper, this is turning around, this is, coming off the bottoms with the software, and if software is going to move, this should follow. That can happen, but it's not going to perform the same as the leaders are, right? The leaders are going to really outperform. This may trend upwards, but I want the leaders. I want what's going to make me lots of money. I don't want to just bottom fish. I don't want to grab a laggard, because even in an uptrend, it's just not going to perform as well as the leaders. Now, the same way of saying that it's not going to perform as well in the leaders in terms of the upside, on the downside, it's going to get hit much worse. So when if these leaders get hit, and let's say even if this is a failed breakout for some of these software names, this is going to get hit pretty bad, and this is going to trend downwards. And you're fighting an uphill battle with this name, and it's just clearly to me, not one of the leading stocks, and that's why I'm staying away from it. I want the leaders. I want the best merchandise. I'm not walking to the store looking to go to the budget rack and to find the best deal and the discount merchandise. I want to buy the highest quality merchandise. And it's something that's heavily, heavily talked about in how to make money in stocks. I highly recommend take some time, listen or read it. The listen is not too bad. I think it's like 10 hours. Do it in like a week of driving around to work and working out and walking around and doing chores around the house, and you'll get through it. And when you get to this part, pay some extra attention about buying the leaders and not buying the laggards. Understood. Leaders will make 100% move, laggards will make 40, 50% moves. And we're being optimistic there, right? Especially in a group that's as broad-based as software, right? We're not talking about like, okay, we're looking at semiconductor memory, right? Where there's like a handful of names. When we're talking broad-based technology software, there's insane number of software names. Um, is this the software industry that's going to be where the money's pouring into, or maybe this is the software industry where it's just not going into? So it's a broad-based group too, where I would argue that like I'm not expecting every software name to trend upwards. I'm expecting some of the leaders and some specific groups that fall into those similar competitors to those leaders to do well. Um, but I don't expect every software name to do well, right? Because like, look, this is a software name. This is a name that I traded and did pretty well in last year, but um, Life 360, it's an app, it's a software, it falls into the software space. It doesn't have the same, it's not, it's a totally different play than some of these others. And you could say, oh, look, it got over the 200 day, and look at the big move it made today. And the software in general is making a good move, but this might not go on a big run. This might just chop sideways and be rough. Not every software name is going to do well. And again, just focus on those leaders. Please focus on the leaders. Ideally, how down would you recommend a stock? How down would you recommend a stock be down from its 52-week highs? So the CANSLIM answer for that is I don't really want it more than 30 to, let's say we'll go even to like 30, 35, maybe even 40% off all-time highs. I will argue that it matters more about the uptrend. A good example from last year that was a stock I actually got a lot of crap for was buying Hood around here when it was showing a ton of relative strength. But it was above the 50, it was above the 200, so it checked my boxes there. It was a little bit of a ways off of all-time highs at the time, right? 20% off all-time highs, very, very deep base. I think I might have bought some, I forget where exactly I bought, but whatever. It was showing a lot of relative strength in the market, and it stood out amongst everything else. So I was willing to buy it. And then when it came here, I bought it. People like, this was too deep. It corrected too much. It was too deep of a base. To me, what stood out more was not just the percentage it was off the all-time highs, is just more that this was showing so much relative strength and was showing very, very to be possibly a strong moving and one of the leading names during that time. So I'm not saying that there's a exact percentage, and exact percentages are rough because an ATR on a name, right? Let's look at SanDisk, high ATR name. Its pullbacks to the 10 and to the 21s were to the 21 EMA was a 20% pullback. For some stocks, that's a big base formation, pullback to the 10 week on this name was, like a 30, it was like a base pattern forming where some stocks will break it more than that. So the exact percentage is different because stocks are going to behave different. Higher ATR names are going to probably see further percentages off of highs, further and deeper pullbacks. Whereas a lower ATR name is probably not going to see a percentage. So to me, again, it stands out more about how that stock is behaving versus the overall market, When I look to the left-hand side of the base, where do I see the possibility of some supply coming into the market due to some of those bag holders or weak hands that are down and looking to get out break even? And those mechanics of the market are what kind of are dictating what I think about a chart and how I'm willing to act. So I can't, there's not an exact percentage I would say to use on something like that. If someone wanted to buy a net, is it better to wait now? Didn't want to buy before earnings. Rule number one, we are not gamblers. And if you are buying into earnings, in my opinion, within a day or two specifically, but really, I think a week. And I said this in the Discord too. If I don't feel I can get a 10% cushion before earnings come out, realistically, then I will not buy the name. That's my bare minimum line in the sand is a 10% cushion. Ideally, I like 15. And those who are on Discord today will say, oh, you also said if you had an 8 to a 9% cushion on a name and it was acting really well, you would just probably reduce your position size to lighten up on risk. Yes. So it is not a strict line in the sand, but I need some sort of cushion where I feel that what happens very often during earnings, we get a volatile move, whether up or down, that if that does happen, I am not throwing money out the window. And a lot of times if I'm getting stopped out or I'm getting out at break even or a smaller loss, and where if I put on a brand new position, I can easily blow through my max allowed loss of a 78% loss, which I really tend to try to stay around 5%. But I could blow through that because I don't have the cushion. And I don't want that to happen. And earnings are a gamble, right? Earnings can be good. Earnings can be bad. The market can react to things that are said on the earnings call. It doesn't, just because a stock is a certain type of company doesn't necessarily mean, or you love the product, doesn't mean the earnings reaction is going to be great. And I don't want to roll dice or flip a coin going into earnings, knowing that things could break either way. And the way that I manage that is by having some sort of cushion. And you're not getting a cushion the night before, the week before, and even sometimes in certain names, even 2 weeks before is a little tough to try to expect a 10% move, because very often the closer you get to earnings, the less movement you get out of a stock, because everybody's thinking the same thing. They're not buying, they're not selling, they're kind of sitting back and just saying, all right, let's see what the reaction is. Let's see what the earnings report says. So, if someone wanted to buy a net, I will openly say I am sure there are ways to use options, to hedge, to do things to put yourself in a position to profit from a good move in this name without putting too much risk. I know there are ways. I don't know them to the point where I can apply them, and nor do I really care to, because you don't have to use every single tool that's available to you in the market. You got to just do the few things that are really working for you, and that's not in my repertoire. So from a basic just buying and selling standpoint, you got to wait. You got to be patient, and you got to be willing to let names go, right? Here's Rocket Lab. Here's Rocket Lab's earnings. I owned it prior to earnings. I didn't have the cushion. I sold. It then went up 34% the next day. Oh, well, you are not going to catch every name. And it's very easy in hindsight to turn around and say, oh, man, I should have held on to that one. Well, you know what? Here's another really good example of earnings, right? Earnings reaction here. Big, up move. Really, no, it's this one, right? Up 35% on earnings. Awesome. Now let's start looking at how some of these other earning reactions went. Down 10%, down 8%. This was this was down. But you see what I'm saying? Like, you can have a 35% move, you can have a 15, 20% drop. And nobody truly knows all the time what's going to happen. And it's very easy to look at things hindsight, like I had mentioned with Rocket Lab, and been like, I should have held on to that name. But it's a gamble. It's a coin flip. It could have just as easily have broke through this level and broke through the 200-day simple moving average and did this back here and stopped me out and cause me to have a 20-30% loss. That will hurt you, because if you don't know, and you really should understand this when it comes to loss math, what does it take to recoup that kind of loss, right? A 30% loss, I think it's like somebody could actually fill that in for me. I think it's a 300% move. I'm going to figure this out. 30% loss. So if you have a 30% loss in a single name, that's a lot of damage to your equity. And in order to kind of make that up, you need a 42% gain just to break even. 42% gain just to break even, just to get back to where you were. I'm not rolling the dice when I could have. Again, that doesn't necessarily mean I'm going to get a 30% loss, but it can happen. So that's why you want to have that cushion going into earnings. And that's why you have to be comfortable with the idea that you're going to miss things, and there's going to be plenty of other names to buy. And you're here to trade a strategy that is going to make you long-term successful. That's going to make you a consistent trader, not somebody that's gambling on the market and hoping things work out in the right direction. Yep, that's why I waited. But Thyrahabalhad earnings this evening are up 9% now. Don't know at what point for earnings would be a good time to enter, or better to wait for a pullback consolidation. That comes down to rules. There are people who will buy earnings gap ups. I am one of those people, specifically if I'm breaking out earnings gap up to an all-time high. I try not to buy earnings gap ups when I'm already on an uptrending extended stock that hasn't took a break. But if I got an earnings gap up and it broke out of a base, I'd be a little more interested in possibly buying that name. And looking at Rocket Lab, I almost did that. I really did. I almost bought Rocket Lab as on the earnings gap. But it just got super, super extended very, very quickly. And it was very hard for me to put any logical way to get into this name that I was comfortable with. Because sometimes you'll see these big gap ups, and then you'll see a name that gaps up and then pulls back within the next couple of days down back to its start of its lows. And that sometimes could be a big move as well. Not going to be as normally as gap down or quick as an earnings. So you could probably get your normal stop out of it. But there's a lot of different ways that people trade earnings gap ups. So you kind of have to look at how your exact strategy is, understand what you like. Some people will buy the earnings gap. Some people wait for some sort of tightness, and it also all depends on the chart. You know, there's every earnings gap up is not created equal. Every earnings gap is not being played out in the same context. And where I may be willing to buy an earnings gap on one name, given what's going on in the stock, I might not be willing to on another. Where I may want to wait for a name to digest, I may not want to wait for another. So it's one of those things that there's not a real true simple answer, and there are going to be different situations where you're going to be interested in doing different things. And again, this all comes down to you're not going to be right 100% of the time. But it really comes down to managing risk. That's the most important piece of trading, is managing risk. I would say managing risk and keeping keeping your voice in between your head in control, so you make proper decisions within your strategy. But again, this also all comes down to being consistent on one big winner. Even 100% winner is not going to make you it may make your month, it may make your year. It's not going to make you a good long-term trader. It's not going to make you a top trader or somebody that can do this for a long time period. There's a reason why many early on traders are boom and bust traders, because we can all catch a winner. It's not that hard. But can you hold on to that money? It's a big piece of trading. It's very easy to catch a couple of big winners. It's harder to hold on to that money. So keep that all in mind. What else? Don't see any other things thrown in there. We'll talk a little bit about some of the other stuff going on. Speaking of earnings, look, Datadog, beautiful today. I mean, absolutely beautiful. Like I could have used a 7 to 8% stop during the day and kind of got in between these levels down here and had a really good technical stop retracing back into this pattern. But again, earnings in 2 days. I don't want to play that game. And that's something that you have to stop thinking about things being I'm going to miss out and more worry about managing risk. When managing risk becomes more important to you than catching a single stock, you're gonna be able to mentally handle the idea of just being like, whatever, go on without me. I don't care. There'll be another name. I'm not putting that kind of risk. It's just like anything in life. Everything comes with risk and rewards. Sometimes the risk is not worth the reward, as nice as that reward may be. People who tend to get themselves in trouble in their life tend to only think about the reward and never think about the risk. And then eventually the risk comes to fruition and then they are shit out of luck. Same thing with trading. This is a perfect example of an earnings gap up I'm watching. If we look today at the 5-minute chart, here's a intraday example of why I'm watching this name. We had a massive, massive gap up, ridiculously huge gap up. And it was never able to get even above. Sorry. There we go. It basically never, the first 3 minutes after the 3-minute high, which is really also essentially the 5-minute high, it was never able to get back above that. So I'll never really buy right off the open unless it's buying right off the open as it's breaking out of a base and gapping up to a certain extent. But something like this, I would never have bought this up here. And what happened? If you would have bought up here, boom, rough 17% loss. I mean, obviously you probably would have sold before there, but this is an example of a name that I'm just kind of watching. This is an example of a name that I am just going to sit back, wait, and hopefully see this kind of flag out. It could retrace, it could bounce and go on without me, but this is an example of a name that I do not chase the earnings at, but I am interested in watching. Another name watching earnings in 2 days, though. A lot of these names you're going to see on here have earnings coming up. Earnings in 2 days, laser. And again, if you guys have names you want me to look at, I'm just trying to think about stuff I wanted to bring up. Credo, this was brought up in Discord. Do I think this is cream of the crop right now? No, it can't even break above this area right here. It just reclaimed the 50. This could just as easily be a perfect short setup for somebody on this name. And it's, again, it's still in a downtrend, still hitting resistance, not making higher highs, and not tight. And that was another thing that I talked about. Really, the two criteria I look to buy something is either a breakout through a key level, whether it be a base, whether it be a shorter term area like a pullback, not like a pullback, like a wedge pop or a mini Darvis box or a base pattern, or it's a leader that is pulling back to a key level and getting tight. Those are like kind of the two buckets. If it is extended in the short term area and not breaking out and through a key level, I have no interest of it. This is a perfect example. It's extended from a tight area in here and has not broke through a key level. I am not interested. This is a name I am watching closely. We have a giant, massive, unofficial, not textbook cup with handle forming right here. As you can see, this is just a giant, big weekly 53-week deep base. We got right into those all-time highs. We see this kind of forming a handle. We see it hugging on the 50, and we got a pop right here. Today I don't think was the day to buy. It's kind of extended. I would like to see this form a tighter base. I would like to see this tighten up and give me a better entry, but it's still a name that I'm watching. If it goes on without me, it goes on without me. Dave is another name that looks really good. Reclaiming the 21 EMA today. Big move. I could see somebody wanting to possibly buy this. Not my style, but I could see it. Net. Kind of like a cup with handle type of breakout right here. What else is in here? Palo Alto, right at those all-time highs with like a double bottom type of pattern. So name worth watching. Again, this gives us enough earnings time. This does not. This was a name that I traded. Made a big loss on. Not big loss. Bigger than I like to. Cisco Systems, this looks good. Retaking the 50. Do I think it's the best of the best? No. And that's where a lot of these names that you'll probably see me flipping through on here, and this has to be cleaned out. Do I think it was the best of the best, right? This actually looked pretty good. This is a name I think some people may have been interested in buying. Still below, though, tucked below these levels right here, so possibility of hitting some resistance there. Same thing, so right below those areas. Snow was extended for me. ANET. This name I had bought back here and then sold it basically break even as it retraced. And now it's been going on pretty well. Not that I would have. But nice 45% move from where I originally bought it pretty much. Garmin, talking about earnings, right? Big gap up. Would like to see that digest that a little bit more. Schwab, like to see a little mini base form up here. Victoria's Secret, really, really tight towards these highs right here. IPO, giant IPO base. Right near those all-time highs. Would like to see this tighten up. So a lot of times, sometimes I'm identifying like if this could pull back, catch up to the 21 and really trade tightly, this could be a beautiful setup, which is actually how I caught NavN. Is I was watching it coming this way and I was hoping for the tightness, and I got the tightness and I got the entry, but then I got the rejection there. So other than that, a lot of names still got some work to do, or they've done a lot of work and maybe they need to take a break. All right, you guys are dropping off. I see people jumping out. I see people getting bored. We covered a lot. So let's just recap. Let's summarize, because I said I was going to go over how to approach this market. And number one, we got a follow through day. You should have bought something, even if it was the SPY or the QQQs. That is rule number one. You don't pick and choose follow through days. You can have an opinion. You can't trade on that opinion, because you can easily see yourself get locked out like people did in April, and everybody else is making a ton of money and you are sitting there with nothing. And then when we finally did get the pullback and things did start to digest, things got choppy and those people got chopped up, and a lot of those people are severely underperforming, and their year would be very different if they just trusted their rules and didn't think outside the box and try to reinvent the wheel. So you should likely have bought something today. And if you didn't, should really look to put some exposure in. Now, look, if we drop and things start correcting and this follow through day fails, I get it. But there's a reason why you want to start being willing to put some risk in this market and not sit back and let this thing possibly go on a run without you as names break out, as names get buy signals. At the end of the day, and this is something that I think it's funny that people don't think about it this way. What's the worst case scenario? You get stopped out. You take a small loss. It's part of the game. You're not going to be right all the time. And if you're afraid of being wrong, and if you're afraid of taking a loss, you're going to really struggle. So I bought these two names today. I'm okay if I get stopped out of both of those. I know that follow through days can fail. I know that this has been a really quick recovery and maybe it doesn't work out. I'm fine with that. I bought these names and maybe they stop out. Somebody asked me why I bought Dell and why didn't I buy HPE? They thought HPE was better. They think Dell's overcrowded, like I said. I looking at everything, the fundamentals, the leadership, the size, the landscape of the market, I think that Dell was the buy that I wanted. Dell seemed like the leader. I could be wrong. HPE could be, Hewlett Packard could be the leader. It's okay. I'm wrong. I'm gonna be wrong. I'm gonna be wrong a lot. I'm a trader. It comes with the territory. And there's a reason we have stop losses, and you can't expect to make money without putting money on the table. You can't expect to sit down at a poker table and expect to win the World Series of Poker if you aren't willing to put a little risk into the market. The key is putting that risk in when it makes sense, putting that risk in when you're getting the signals, when it follows your strategy, and not going against your strategy and trying to make judgment calls, or not managing that risk and making sure that those buys that you're making are, you're not going all in on a hand that you shouldn't go in all in, or you're not consecutively betting on a bunch of hands that are poor hands to bet on. You sit back, you be patient, and when the hand presents itself, you have to be comfortable and willing to put money into the market. And this is something that I said too. Look, I'm going to bring up, when people were trading real heavy in this time frame, I continued to say over and over and over and over again, you don't need to trade every market. You don't need to trade every market. You don't need to trade every market. And people were just super optimistic. Now we do this, and there are people that are not optimistic. People are concerned. And I would argue, if you limited or even didn't trade during this time frame and waited for the signal, you'd be much more mentally comfortable taking a trade, because you didn't get beat up here. People get beat up in here. People get tossed around. People lose their confidence. It's like, somebody gets hit over and over and over and over again, and then somebody raises their hand at them to give them a high five, and they flinch because they've been beaten up. And it's kind of like what the market's doing right now. They've been slapped and slapped and slapped and slapped and slapped. And it looks like the market wants to be like, yo, high five, let's go, we're going up. And that hand goes up, and they're like, oh, and they're like flinching. That's what happens mentally. That's why this game is so mental. That's why why these rules are out there. That's why there's so many strategies out there, yet so many people struggle. It's because they don't handle they try to go outside the rules. They can't handle their emotions. They damage themselves in these type of markets. And then when the follow through day does come through, and it was the same thing that happened here, right? I knew people buying SanDisk, buying MU, buying a lot of these names while the market was rolling over, while the market was turning, and they're like, it's breaking out. And I'm like, don't, just wait. The market's saying don't put exposure, no exposure. Just be patient. Just be patient. People got beat up through this time frame, and then when we got the follow through day, they had enough, and they were not willing to put money in the market, and things went on without them, and they underperformed. So please, this is why it's so important to understand these trends, understand these markets, and to be able to know when you should be putting risk, when you shouldn't be, and be mentally put together, and not exhaust the mental capital for this crap and save it for this, so you can act and make trades accordingly. So let the market pull you in. Don't get overexposed. Don't be buying, going from 0 to 100% exposure over the next couple of days. Make sure you have your stops. Make sure you know what the equity risk is on every trade, and continue to watch the market, and continue to understand that the market might not shoot up. It might not shoot down. There might be some, the whole reason we do our daily work is to really understand how this market is fluctuating. Continue to screen, continue to look for leadership, understand some names are going to really stick out. Some names are going to kind of crumble, and be willing to be wrong. Those are the few things I have to say. Hopefully everything that we went over today was helpful for people. Sit down, do your work, and get ready for tomorrow. We're not even halfway through the week, so it's been fun so far. Let's hope it continues to be fun and profitable for everybody. There you guys go. The X account, link in the description for Discord. Deepvue link in the description as well. And if you guys got questions, just please reach out to me. Especially Discord. We're all there, not even just me. There's tons of great people, even professional traders in Discord, that are there to help you. So other than that, that is all.